Hello, this is Mike Swanson. I run the website WallStreetWindow.com. It's time to talk about what's going on in the financial markets. Most of the other people you see on YouTube and elsewhere, they speak to you in the terms of memes and predictions. What we're going to do, though, is different. We're going to look at the actual trends and charts of a couple things going on in the markets. We had a little bit of a pullback in October and November. And that pullback seemed very sizable for people, but in reality, it wasn't. The reason why it seems so big is because some of the big tech stocks like Palantir took sizable drops, and a lot of people own them in their accounts. And Bitcoin, of course, really tumbled, falling close to 30%. That's a very significant decline. But last week, silver simply soared. So people that are invested in silver so far in the past 2 weeks are the ones really winning in these markets. Silver stacking is proving out to be one of the best things you can do. But anyway, this is my free newsletter that's going to be going out soon. You can subscribe to it by going to WallStreetWindow.com. But anyway, here is a chart of the S&P 500. We go back a year, the pullback that happened in October and November doesn't really look that big. It's nothing like what happened in April and March. And in fact, the market didn't even fall 10%. It fell only 5.7%. And the VIX is already back below 16. It didn't even get above 30 during that dip. So overall market volatility remains fairly low. In the past 2 weeks, the market has barely been moving at all. And in fact, that's pretty encouraging what happened last week, because historically the market will trade up the week of Thanksgiving and then dip the week following, but it didn't even really do that. The dip happens because people are just taking some profits in what was a very low volume rally, but they didn't take profits this time. And the Fed's going to be lowering interest rates most likely in just a couple of days, which is going to help stimulate things. But again, people feel like they got hurt while this was going on because most individual investors own extremely volatile instruments. And when the market dips, those things really dip, especially Bitcoin. But look at gold. Gold made a new high in October and also dipped, but it barely dipped at all. While the S&P 500 fell below its 50-day moving average, gold remained above it. That's the blue line in this chart. And, the dollar's been declining for about 2 years. The Trump administration wants a lower dollar. The Federal Reserve's set to lower interest rates over the course of the next 6 months. All that's bullish for gold. And of course, the deficit and debt problems and geopolitics is causing central banks around the world to have shifted into gold over the past couple of years. These trends are simply going to continue. So I'm extremely bullish on gold and mining stocks for next year. But what's really trading now with extremely low volatility is the commodity complex as a whole. What you're looking at is the CRB Commodity Research Bureau Index. And the pink lines I have on these charts are the 200-day Bollinger Bands, which measure an average of volatility over 200 days. So it's a very long-term indicator. On the bottom of this chart is the width, measuring how far apart or close together these bands are. And you can see it's just been falling and falling and falling and falling over the past year. And now it's gotten to a very extreme low level. This is very significant because when these bands contract like that, typically they will then expand, meaning you'll get a very sizable, significant, a long-term trend occur. So that's likely to happen next year with commodities. This happened last year with gold. Gold was consolidating for 2 years and then broke out. This is a chart going back for 2021. So commodities have been consolidating now for 3 years. 3 years. Gold broke out last year. Commodities continue to consolidate. Now, historically, gold and commodities have a very important relationship together. We're on a long-term trend. Gold and silver break out first, and then delayed by a year, sometimes even longer, commodities one by one break out and begin bull markets of their own. So I think that's what's going to happen next year. I think this is going to be one of the most significant plays next year, and I plan on getting involved in that. I haven't exactly figured out how yet, but that's one of the things I'll be thinking about a lot between now and New Year's. And silver is backing this up. You know, precious metals go up first, soft commodities next, and I think that's next year. And the energy complex tends to be the last part of the commodity complex to get extremely bullish. But you're looking at something no one I've seen ever talk about. People talk about the silver to gold ratio, but this is the silver to Bitcoin ratio, and you can see it's just going straight up. That's because silver is soaring while Bitcoin is taking a dump, and Bitcoin is now lagging silver, lagging gold, lagging the stock market. Bitcoin has now become the weakest element of the financial complex. So I see Bitcoin and crypto as stuff to get out of on rallies and bounces and move into either stocks or gold or silver, other asset classes, period. I think next year is going to be a brutal year for crypto traders. I think what we're getting now is a dead cat bounce that's probably going to last into New Year's. And then next year, I think is going to become a total nightmare for crypto players. And that chart is warning of it. So this is the couple things I'm looking at right now and looking forward to in the future. These are what the charts show. These are not predictions. When I look at the CRB index, I'm not predicting something. I'm telling you, historically, when you get low volatility like this, extremely low volatility like this has lasted for 3 years, you're going to get a volatility expansion. That's just the way it is. It's not a prediction. That's historic technical chart trends. And that would suggest that inflation is going to pick up very significantly too when we're here 12 months from now looking at things. So I'm trying something a little different in this video. I'm curious to see what you think about something and if you'll participate in answering a question. So the Federal Reserve is likely to lower interest rates this week. Do you think that's a good decision or a bad decision? If you look at the description below this video, I've included a link to a poll with that question. I'd appreciate it if you would answer that because I'm curious what you think. And if people, participate in the poll, I'll do future polls and you can get me to put out polls you want to. So we'll see. Go in the description and see what you want to think there. And I'll be talking with you later.